Okay, everybody, it's me, Gregory Mannarino. It is still Wednesday, August 4th, 2021. Well, we have a lot to talk about, as usual. The freak show, the markets, and everything else. So let's do that. So the stock market today, no surprise to you. I explained this to you earlier this morning when I did my video that there was not a great setup for the market with regard to the 10-year yield cratering, crude oil taking a hit. I mean, two of the four keys to this market were missing. So if those keys were missing, well, what would you expect? Stocks to fall, period, the end. So Dow Jones Industrial Average fell. The NASDAQ actually put on a gain fractional. The S&P 500, which hit a record high yesterday, pulled back as well. Okay, but the real story isn't what the stock market did today. It's what the 10-year yield did, falling. Okay, we actually went up from this morning. It's 1.14. Last I looked at it, 1.16. Okay, nothing dramatic here. I would not be surprised, like I said earlier, to see that fall further here. The whole yield curve is flattening out. And that's something else we need to talk about in a little bit. I have some stuff I wrote down here. The dollar did gain in strength today. So there's another key we lost. And the market only sold off a little bit with regard to the Dow and the S&P. Nothing major going on here, even in the face of what we heard from the Fed today. The second in command opened his pie hole and had a few things to say, and the market's going to laugh it off. I'm laughing it off. As a matter of fact, I was rolling on the floor earlier. I really was. We'll talk about that in a minute here. So on the back of the market, finishing mixed, like I just covered for you. Cryptocurrencies catching a nice bid today. Gold and silver, gold flat today. A fractional gain out of gold, and silver took a little bit of a hit. I already covered crude taking a hit because of, people are maybe starting to understand that we are in an economic meltdown, but they're going to prop it up. Some crime will occur, some false flag event to keep it propped up. Count on it. Count on it. It's going to happen. There's just no doubt about it. It always does. It never fails. What else would you expect here? Anyway, so let us move forward. People, there's something I want you to pay attention to here. This is called, especially you lions, the S&P 500 Basic Materials Index. I don't know how many of you have ever heard of this before, but it is a leading indicator of the markets. Well, this indicator is cratering. What does that mean? It's pointing directly towards an economic slowdown. Like we need more evidence that this is happening here. This abysmal jobs number that we got today. You know what bothers me? This is not just a number. These are people. Okay, these are people. And wait till tomorrow when we find out first-time unemployment claims. You think it's going to be a good number? It's going to be horrible. Absolutely horrible. And these are the numbers that they're allowing us to know, that they're allowing us to see. Anyway, that's a big deal. Now here's another one. So Citigroup comes out today warning about a market dip, a market crash, or whatever you want to call it in September. I'm going to call BS on that. Honestly, do we have a market that is in LaLa Land that has no bearing on reality? Absolutely. But what do we know? The bad economic news is going to not just keep coming, but it's going to get worse. And despite what came out of the mouth of the Federal Reserve Vice Chair today, Clarita, can't stand this person. He's another thing. He's not even human. The Fed is going to keep buying assets. They're not going to cut back on a darn thing. But this is what came out of its pie hole, okay? Fed Vice Chair. He sees the first rate hike in 2023. Before I go on to the next statement, let's cover that. All right, so this thing from the Fed is saying 2023 we're going to start raising rates. The Fed is going to look for every excuse possible and impossible to move goalposts. Oh, the economy's not doing so great. Oh, the labor market still needs help. Blah, blah, blah. Whatever they got to do. Move goalposts. Move goalposts. 23, remember this video. Save it to your whatever, your browser. Not happening. Okay, it's not happening in 23. I don't see it. And I've been so spot on with what the Fed would do before they've done it that it scares me sometimes. Now, the next statement out of its mouth, because it's not human, I think you all know that, there's a possibility, according to this thing here, that the Fed will slow its purchases of assets, mortgage-backed securities, treasuries. No, that's not going to happen this year. Saying by the end of this year. Now, in the face of what you and I are well aware of, again, we have an economy in free fall, debts and deficits hyper-ballooning, a middle class that's being systematically exterminated by design. And this system, the way it's all set up, it's a mechanism to create this. I mean, to inflate the debt, to, eliminate the middle class. I don't know another way to put this. Create that two-tier society I said would happen from a decade ago, longer. Well, it's kind of really in our face right now. So in my view, if the market believed, for example, okay, so we had a sell-off today with regard to the Dow and the S&P. If the market truly believed that the Fed would stop or cut back, even, slightly, with regard to asset purchases this year towards the end of the year, which is only a few months away, the market would have felt like 1,000 points, maybe 2,000. And if the market believed yet again that in 23, according to, Fed Vice Chair, that they're going to start raising rates, the market would have cratered. It's the only thing right now that's keeping this market where it is. I mean, it's beyond LaLa Land. Nothing matters here. It's about easy money. That's all. It's grand theft on an epic scale. Again, what are they doing? They're robbing every person they can think about and imagine who has an interest-earning account. You cannot earn a real rate of return on an interest-earning account, even if it's a high yield. Okay? It's just not happening. You are losing purchasing power. Every day you keep a single dollar in a savings account or an interest-earning account. You're not earning anything. Okay, you're losing purchasing power, period. And that has inflated a stock market bubble. Okay, by keeping rates suppressed, the mechanism is very simple. By suppressing rates, okay, in case you don't know, this is a deliberate act to manifest a risk-on environment. In other words, push cash into the stock market. Okay, a day like today, when you saw the 10-year yield over the past couple of days plunge like that, some cash is making its way into the debt market. See, it's an inverse relationship. When the 10-year yield drops, that means cash is going into the debt market. When the 10-year yield or any part of the yield curve rises, that means cash is leaving the debt market. See, the higher rate yield occurs when they're trying to entice people to buy debt. You understand? But you got to be out of your freaking mind here to own any debt at all. How's that for the most part? No. Even the dollars in your pocket, those are units of debt. And if you're holding them, you're investing in them, and they are losing purchasing power. You got it? I think you understand that. I really, really do. At least I hope so. So anyway, in summary here, let's just put this whole lovely thing together here. Okay, stock market fell under some pressure today. Nothing major. NASDAQ finished positive despite the cratering 10-year yield, crude oil getting hit, the dollar turning around, and statements out of the Federal Reserve Vice Chair. They're bringing out the big guns now, not just the little, peon president creatures. You understand? They got to resort to I don't know, whatever they got to resort to. The bigger gun out here to maybe convince the market, and the market's not convinced. I'm not convinced. Are you convinced? Are you convinced that in the face of everything that we're seeing here, the economic meltdown that we are in, the continuing round after round of bad economic news, you're going to tell me that the Fed is going to all of a sudden stop buying assets, which is their goal? Their goal is to inflate. You have to understand. See, the main thing that the mainstream media is not telling you, and you will not know, they will not allow you to know, is the Fed's goal since their inception has been to, well, eventually become the lender and borrower of last resort, and that means they have to hyperinflate their balance sheet. They have to own it all. You understand? That's what they are doing. And it's a deliberate act. And everything around you right now is a byproduct of what the Federal Reserve is doing. They are a criminal organization. They are public enemy number one.